Hi folks, Lee Gettess here with the Market Sense for the week of March 17th, St. Patty's Day 2015. We're going to look at some charts that come from the Trade Navigator software, and our first chart is a weekly bond market chart here. And how about the volatility in those weekly bars there the last couple weeks? After this huge outside bar, which essentially looked like it confirmed the top of the bond market, and we're going to zero. They've got this huge inside week last week, which they have now turned and took out. 159.08 is this middle moving average. They opened the week above that and have not been down to it. And it certainly looks like they're heading up to the upper moving average there, which is the 162 area. I can't tell you that they'll stop there. If they keep going, we've got 163.04 as this previous swing high here, and they could go to the upper Keltner band and in the middle of this swing high here, which is let's call it 165.12 or a little higher, mid 165 area anyway. Those are possible, but it's also possible that they dump all the way down to 156.20. I mean, we're waiting on what the Fed has to say Wednesday afternoon and Janet Yellen's press conference. So, when the Fed is involved, anything could happen. But this is a pretty doggone impressive recovery, which does not mean that this didn't signal the end of the bond market. It's a long ways for them to go to make new highs here, and I kind of doubt they can do it, but I'm not going to pretend I understand why they're rallying this far. So let's see what happens after they hear from the Fed. Stocks, they've kind of done the same thing as bonds, which is a little unusual. They broke down, and now they've turned back up this week without going any lower. After last week's close, it sure looked like they were going at least to 2025 down here, but they've actually stayed above the mid-Keltner channel. The resistance that could have held them down if they were going to keep going down was at 2060, and they seem to be going cleanly above that. Next target here is 2075. They've already been to 2074, so how close do you need to be for government work? Again, Janet Yellen and the Fed, what are they going to say? Will they remove patience from their statement? If they do, we've got let's call it the 2100 area up here at the upper moving average, and that's getting awfully close to the old highs that aren't much above 2100. They could go anywhere. By the same token, we could break down and be down testing these lows here. Unfortunately, when you have the Fed involved in expectations for what they're going to say, it's a real wild card. And so far this week, actually, there's been a fair amount of volatility without anything really driving it. They've just kind of jerked around a little bit. So this is probably more a time to be careful than it is to try to wade in and make a bunch of money. So that's all we've got for you today. I hope you can find something profitable to get yourself involved with, or at least stay out of trouble until late Wednesday or into Thursday morning. Thanks for checking in to see what we think.